You have the big box retailers, the Home Depots and Lowe's and Bed Bath & Beyond. The big box stores, and particularly fast food restaurants, the Dollar General or McDonald's is a bad example. The Captain D's and those kinds of things. They're often marketed as triple net leases. You buy the building, pure triple net lease. The tenant takes care of everything. You get your check every so often, and away you go. And my personal favorite is the strip shopping center. And the reason I like strip shopping centers is very simply, you can put an office application in a strip shopping center. You can't put a retail application in an office building. So it gives you a much greater market and cadre of people to rent to. And then, of course, there's a variety of industrial and purpose-built, flexed, mixed buildings. There's a cool little industrial building now up in Milford, about not even a mile off the thruway. Building is, 16 or 17 years old. And it's selling for an 11, their asking price is for an 11 cap rate. 11% dividend on your money. And then combinations of mixed-use buildings. Trump's probably the master of that. Trump Plaza, retail on the ground floor, offices on the next layer of the cake, office space. Then the next layer of cake, hotel. He did with the Commodore, with the Gulf of Western building, the condos, and the hotels. And mixing all those uses into one big building. Great way to maximize the value of a piece of land. Most of you have had some experience in real estate in some form or another. What are the three things that determine the value of a cash flow property? Somebody. What is it? Three things. Location. Wrong. Cash flow, and cash flow. All you're buying, period. All you're buying is a future stream of income. And that future stream of income is based on the current rents, the current credits, and the ability to refill that space if and when you ever lose a tenant. That's why you buy those buildings. Now, there's a whole bunch of stuff that goes behind that. I'm not suggesting it's that simple. But it's all about cash flow, nothing else. Location is a factor to get to cash flow. It's only one of the factors. Let's just give you some real estate terminology so we're all on the same page. Net operating income, NOI, very simply, is the net pre-tax income the property generates after all the operating expenses and before debt service are returned to the investor. In other words, it's what the building makes itself without any debt, without any return to the investor. Very important. A lot of agents like to throw out there all kinds of cap rates, current cap rates, pro forma cap rates. It's very, very important that you use a very rigorous, standardized comparison from property to property. The cap rate is very simply is the net operating income divided by the purchase price. Property's throwing off 100 grand. You buy the building for $1 million, it's a 10 cap. You buy the building for 1.1 million, it's about an 8.9 cap. Most important, we're comparing to other types of investments. Think of cap rate as your dividend yield. What's a good dividend? Who's in the stock market? What's a good dividend yield in the stock market today? 2%? 2.5%? Anybody aware of anything much better than that? I don't think so. We're talking real estate. We're talking 8s and 9s and 10s. And then, of course, there's capital gain or loss, just like a stock. You buy a stock at 40, it goes to 30. You've got a 25% capital loss. You buy a stock at 30, it goes to 40. You got a 33% capital gain. Same thing. The real estate theoretically can go up and down, and it will with the economic cycle. So all you have to do is know where you are in the cycle, and you'll be fine. And it's very simple. It's the difference between the purchase price or the theoretical price and the current fair market value. So let's talk about selecting commercial real estate. We talk about Dolph DeRoos talks about the 100-10-3-1 rule. Pretty simple. You analyze 100 properties, you make offers on 10, you get acceptances on 3, you buy 1. My experience doing this deal in Gainesville, that's pretty much what the numbers look like. Very simple. You got to kiss a lot of frogs to find the prince. It's true. There's a lot of dogs out there. Now ask me the next question. If you were going on a safari to Africa, what would you do? Would you just run off on your own? Or would you buy a map? Would you read a book? Or would you hire a guide? Well, one wise person once said, if you don't know where you're going, you might end up there. Well, we're going to suggest to you that Sabre Realty Group is your guide. We're a full-service commercial real estate brokerage firm serving Fairfield County and the surrounding areas. We specialize in purchase, sale, lease, brokerage of commercial properties for individuals and companies. And we provide office, industrial, retail, and investment solutions for our clients. I pretty much met everybody before. Ron Zminiak is our leader over here. Ron's our broker and a licensed appraiser. Paul's our CEO and technological guru. Don is not here. Don is also a sales associate and a licensed appraiser. Debbie is our sales coordinator, licensed agent also, and Alan and myself. Great philosopher Yogi Berra once said, you get to the fork in the road, you got to take it, right?